today is Ron Schelling. He is an independent FX trader. He's been operating in the market since 1983, just when FX trading was starting to be born. Mr. Schelling, good morning.
Good morning.
Thank you very much for your time. Okay, you've been in the market since 1983.
That's correct.
You've just about seen it all.
Yes.
You're a very much a veteran in the markets. So I think you can give us some very interesting insights. The first insight, which before the interview we were talking, is approximately what percentage of intraday traders, I believe it is, would you think, a little bit off the cuff, lose money when attempting to trade in FX markets?
What I see and hear is for amateur traders,
Yes.
not a profession, I think they're losing 9 out of 10.
9 out of 10,
Yes.
it's extremely high.
For some time, and then the account will be empty.
I see. Okay. Spread trading.
Yes.
That's your specialty.
I think so.
How come?
I think I survived with spread trading because stops are very expensive. I tried to find at that time another way to avoid the expensive stops.
Right. Okay.
And I'm happy with a little less risk, but also less profit.
Okay. So the way to make money is little by little, not being greedy.
Correct.
Okay. You're also an ex-military pilot, military aviator.
Yes.
You say that that has given you some critical skills when trading. What are they?
I think looking back all those years, I survived by small positions, spread trading, and discipline like using in an airplane. Follow the checklist exactly, and not deviate to something else.
Would you say a little bit like flying, FX trading, you're going very fast?
I can talk an hour about flying, maybe 2 hours, but I flew a lot of airplanes. It's all about discipline, not systems or whatever.
All right.
And if you deviate from any discipline, you go wrong.
Okay.
It's the same with any trading. It's not the indicator, it's the discipline, small positions in the beginning.
Okay. We talked a little bit about emerging market currencies, and you drew an analogy, specifically when we were talking about the Brazilian real. What was the analogy? I forget.
I have not a lot of experience in carry trades, but like the emerging markets, to me, it's dangerous. It's more like a casino.
A casino.
But maybe I can go wrong. I'm wrong, but my experience is minimal. But looking to those currencies, well, you see what happened. You can go broke within one night.
Right. Okay.
If you are unlucky.
Very serious, definitely dangerous.
Yes.
Also, we were talking before the interview. You were running me through one of your strategies.
Yes.
If I know it's very complicated, but perhaps if you could give our viewers a taste of more or less how it works, and then if they're more interested, perhaps they can contact you or go to your website, your blog.
Yes. So what I do is when I'm ranking the strengths and weakness of currencies.
Okay.
When I see the strongest one correcting for the first time, I go short.
This is looking at the RSI.
Yes. And I'm looking to the weakest at that moment to hedge the position. So I'm aiming for not a full profit, but also not a full risk. And I go out when they come together.
For this kind of strategy, what are your favorite currency pairs?
The major currency pairs, because of the cost.
Okay.
The others are too expensive.
Okay.
All those weakness and strengths are done by me on daily basis, not intraday.
Do you provide these to your readers or your clients? You share this?
No. It's just I explain sometimes to people, but my work is trading real money and not making a website or whatever.
Okay. And then finally, please, with your just over 3 decades of experience in financial markets, if you had to give one single piece of advice to an amateur trader or to a trader who's just beginning, what would it be?
Small positions, be happy with a little bit, it can be fun to make profit in the first time and avoid big contracts.
Okay. How small the position?
The average can be like all brokers are using 10,000 or whatever, but trade 10,000 if you have a $10,000 account.
Right.
Not 50 or 100,000.
So no leverage.
No, in the beginning, why shall you take the risk? You are winning in the market by taking less risk.
Okay, right.
That's your winning goal.
Okay. Very a bit counterintuitive. No, they always say risk reward, but no.
No, in the beginning, but when you feel better, you can go a little more leverage.
Okay.
Maybe 2 or 3, but I use maximum 4 to 5, not 100.
Okay, fantastic.
Yeah.
Ron Schelling, sir, thank you very much for your time.
Thank you.
It's a pleasure. We hope you will join us next time.
Thank you very much.
And that's all from all of us here at WebFG for today. Thank you very much for your time.